Sylvia's Traders Lounge welcomes you all to yet another webinar where we learn trade and profit. We shall be giving you trading insights on technical analysis, fundamental analysis, risk management, and trading psychology. Al-Nawaz Nurani is our guest for today, and our theme is order flow concepts and application of the same to trading the S&P500 Index. Al-Nawaz Nurani was born and resides in Nairobi, Kenya. He has been an online trader for the past 22 years. He is the founder of Follow the Trend Limited, located at Amani Plaza in Parklands, Nairobi, Kenya. He teaches futures trading, order flow concepts of the market in Kenya. His journey in trading started when he worked for a mutual funds company in Toronto, Canada. That is where he got exposed and learned how to trade stocks before shifting his focus to the spot currency market known as Forex trading. Eventually, he discovered futures trading and has never looked at anything else thereafter. He strongly believes there is enough money to be made by trading one currency instrument. He has been trading for himself and mentoring people on futures for the past 12 years. Al-Nawaz decided to open a school where he teaches people the order flow of the market to make them better traders, if not the best. His school provides traders with a full trading course that allows them to become successful traders within a very short period of time. His goal is to mentor you as a trader to trade pure price action, futures trading. His institution, basically, his training school, mentors you to become not only financially independent, but also the best trader. So Al-Nawaz, it's really an honor to have you on the Trading Lounge for the first time, and we hope we'll have you over and over again.
Hopefully, yes. Thank you, Sylvia.
You can just, I know I have read out your bio, but maybe you can just tell us, given your 22 years of trading experience, how it's been for you, the difference that it has been trading, starting out at the mutual fund to becoming an independent trader today.
Okay, so I'm going to, first of all, thank you very much, Sylvia, for having me here today. And I would like to thank all the participants as well for taking out their time and being here with us today. Now, as you can see, and as Sylvia mentioned, I started trading while I was working for a mutual fund company, made a lot of money, lost a lot of money. And it was basically the losses came due to the fact that, you know, I was making rookie mistakes, being cocky, trading without stop losses, over leveraging myself. Basically, any mistakes that anyone can make in you know, in when they are starting their journey in trading, I have made all of them, and I lost my shirt. Basically, I went through a depression. I almost lost my job, and eventually, actually, I ended up losing my job, and then, you know, went into a depression. For about 8 months, I couldn't do anything. I was just vegetating at home till some of my friends told me that, you know what, it was time for me to roll up my sleeves and get back into action. Because at the end of the day, the fact that I was able to make money the first time, I can, you know, repeat the process. And that's how I got back on my feet. And then I said, okay, you know what, I've traded stocks, now let me try Forex. So made some mistakes that were repeated in Forex, made, you know, some money, but lost more than I made. And then eventually I decided to put a stop to that. And I realized that I need to design a strategy that works for me. And there was one component that I was seeing that I was missing. I didn't know what it was exactly till in about 2004. I met with some traders that were trading futures, and I got introduced to futures. And that's when I realized that the missing link for me was the fact that I did not have, or I didn't know anything about order flow. Now, order flow basically, let me share just a screen of what an order flow looks like. But before I go there, I would request everyone to take a screenshot of my information here, so that if you need to get in touch with me, you know how to get hold of me. Can everyone see the full page of what I'm posting here?
Yeah, it's visible.
Yes. Okay. So once you take this picture, then I can move on to what an order flow is and what it looks like. Okay. So this is basically what the order flow looks like. This is what it is. So you see the number of sellers, you see the number of buyers. Now, this is a very simple order flow that you have here. This is the one that comes from the brokerage that I'm using, but I'm going to share another one that is actually the one that I am using, which is what I'm also teaching to people. And that is the following one. Bear with me one moment and I will bring it up. Can you guys see that?
Yep.
Okay, cool. So this is the order flow that we are using. Now, basically, what is the order flow? It's the number of buyers and sellers that we have in the market, and it gives you a different price range here. For example, you can see at 43.14, there were so many buyers and there were so many sellers. And if the price were to come back here, there are so many people who are willing to buy. And if the price gets here, there are so many people who are willing to sell. So here you have all the sellers, here you have all the buyers, and these numbers in blue and green are basically when the price was in that area, how many buyers and how many sellers took actively part in transactions. So this is the order flow that we are using. And the whole idea or the beauty of this order flow is basically it gives you exactly, as of this very moment, how many contracts are willing to be sold or to be bought. Now, why is this thing very important? First of all, how can we say that this order flow is something that we can depend on or it is reliable? This is very simple. If you look at, for example, the Nairobi Stock Exchange, let me give you an example. If you look at the Nairobi Stock Exchange, and if let's say somebody is trading Safaricom, for example, when you get the information that Safaricom right now has sold 5,000 shares or somebody has bought 3,000 shares, whether you are sitting in Kenya or whether you are sitting in China or in Kathmandu or in, I don't know, in Washington, DC, the information that you will be getting will be the same as somebody else is getting. So there is no discrepancy in the information that both the parties are getting. Why? Because all the information is coming directly from Nairobi Stock Exchange. Now, Nairobi Stock Exchange is a regulated market. So therefore, it has only one head office, and that head office is in Nairobi, Kenya. Now, if you are trading futures, it is a regulated market as well. The head office of the futures market is in Chicago. It's called the CME, the Chicago Mercantile Exchange. If you go to my website, there is a link to the CME. So you can go from my website to there, or you can just Google CME. And futures market is a regulated market. So basically what I mean by that is that the information that you are getting is reliable and it is coming from one body, which is the Chicago Mercantile Exchange. And wherever you are in the world, everybody is getting the same information. So therefore, the way you interpret this information and how you trade based on that is basically up to you. But at least you have one thing which is confirmed is that you have solid information. Let me ask everyone a question. How is a chart built? When you look at a chart, let me just, bring a chart here. If you look at a chart and you say, okay, on this chart, I see candlesticks. So let's put a chart here with candlesticks. And when we look at this chart, so here is a chart. It has candlesticks. This is a 10-minute chart. Okay, this is the S&P 500. Now you have all these candlesticks here. You have green and red, and the market is moving up and down. Now, where is this information coming from? Can anyone share any thoughts as to where do they believe this information is coming from.
I think it's coming from the participants in the markets who are buying and selling.
Exactly. So those participants, they are in the market and basically they buy, so the exchange, which is the CME, the CME knows that, let's say Sylvia has bought 10 contracts. So in the order flow, it will appear as 10 contracts have been bought. Or if Sylvia sells 10 contracts, then it will appear as Sylvia has sold 10 contracts. But it will not say Sylvia. It will just say somebody has sold or bought 10 or 15 or 20 or 100 contracts. Or it can be maybe 100 different individuals. They have bought each one of them one contract, and it shows on the order flow that 100 contracts were bought. Now, it will not tell you whether it's 100 different people or if it is one person, but that does not matter at this level. The information that we are getting is the number of contracts have been bought or have been sold. Now, that data comes on your chart and it prints your candlestick that you have here. So this candlestick is printed based on the number of people that bought or sold. So if you have sold, it is a red candle that will appear. If the balance between buy and sell is negative, there are more people that have sold than those that have bought, then you will have a red candlestick. If you have more people that have bought than those that have sold, sorry, I think I said the opposite thing. If you have more people that have bought than those that have sold, then it will be a green candlestick because the market is going up. And if there are more people that sell than those that buy, then the price goes down. So therefore it is a red candlestick. Now, this is basically where the charts are coming from. Now, what we teach is how to interpret the dome or the depth of the market or the tape as it is called. So you don't necessarily need to look at a chart, but you can interpret the volume or the flow of how the market is moving and how the price is moving, and therefore you can trade based on this. So we are actually teaching you to analyze the essence of what is basically what the candlesticks are coming from, or what is actually generating the candlesticks. Now, another question that I get very often is people are wondering, what is futures? Very few people, if at all, people have heard about what futures is all about. So I'm going to give you a simple example, and it's going to illustrate to you what a futures contract is. If, let's say, I am a farmer and I grow coffee, and Java comes to me and they say, okay, Al-Nawaz, we want to buy your coffee crop. When is it going to mature? So I say, okay, we are in June right now. In September, my coffee, I will be harvesting my coffee. Now, let's say for argument's sake, people at Java look at the price today in the market and they say, okay, you know what? 1 kg of 1 kilogram of coffee is selling at 100 shillings. Let's say it's selling at 100 shillings. So we make a deal and we say, okay, if I deliver you, let's say 20 tons in September, you are going to pay me at 100 shillings per kg. We shake hands on that. In this particular case, we sign a contract. And when September comes, I go with my coffee and I deliver it to you. Now, here is the interesting part. We agreed today in June I agreed to sell it at 100 shillings per kg. Now, let's say September comes and the price of coffee has gone to 110. Then Java is going to be very, very happy because they bought something in June at 100 shillings. And now the price in the market is 110, but yet they still have to pay me only 100 because that was our contract. So basically Java is benefiting from it because they are saving 10 shillings per kg. And if comes September, the price of coffee has dropped to 90 shillings per kg, then I benefit because I have sold it in advance at 100 shillings But when I deliver it, at that moment, the price is 90. So I'm actually making 10 shillings extra. Now, this is what a futures contract is all about. You are basically binding into delivering something at a given time at a current price that you agree upon, and it is a contract that you have, and you deliver it a month, months or 6 months or a year down the road. That is what a futures contract is, and that's why it's called futures, because it is delivered in the future. Now, this is something that is very, very interesting because a lot of oil is delivered that way. People have oil contracts that actually are renewed every month. They expire after a month. So people buy it and they say, you're going to deliver oil to me, let's say 6 months, a year, 5 years down the road. Coffee, sugar, tea, meat, a lot of these kind of commodities are actually trading in futures because people want to make sure that they have the supply that is coming in on a regular basis over the course of 6 months, a year, or 2 or 5 years down the road. So this is what a futures contract is all about. Now, in our case, what we do is we trade the futures contract, but we don't wait to get delivery or to deliver to someone a contract or goods, I should say, in 3 or 6 months down the road. We are trading this just like we are trading stocks or we are trading Forex or anything. We buy something. If the price goes up, we make some profit, we sell it. If we sell in advance and we have to buy it cheaper, we do that, we short. When the price comes down, we buy it, we close our position, and basically we make money. So we are actually day traders. So particularly what I teach is day trading. You come in the morning, you open your platform, you look at the market, you do the analysis, you look at the order flow. If the market is going up, you are going to buy cheap and buy low and sell high. Or if the market is coming down, you sell high and then you buy low. Basically, I don't hold any position overnight. We start in the morning and we are done within 2 hours. The target is to basically trade no more than 2 hours. If you can trade 2 hours a day, win or lose, you're done. You close your platform and you move on to whatever else you want to do. Is this so far clear for everyone?
Crystal clear.
Now, let's get to another thing that I would like to share. I am going to share something that I did today. Like I was trading just one contract, okay? I'm not trading my regular position, but I want to share with you. And this was something that was done in an hour, less than an hour and 15 minutes, give or take an hour. So I'm going to share my actually account here. So here we go. So today I made $97.50, trading only one contract. Okay, so this is about 11,000 shillings. Okay, now the reason I'm trading one contract is that if I trade 5 or 10 contracts and I come and I show you that I've made $1,000, people are going to say, oh, you know what, there is something that is fishy, because everybody in Kenya is very, very skeptical. And I understand to a certain point, because there have been a lot of people who unfortunately and very sadly, when they are trading Forex, they are getting hammered. They are losing a lot of money. They are trading because they are not ready to start trading, and they are getting pushed into trading, and sadly they lose money. Now the thing is, this is my account. I will actually, let me see, what else can I share with you? Just give me a moment. This is my live account. So you can see it has this amount of money. Okay, so there are multiple accounts that I have, and this is one of them. So you can see that. And there is nothing that I'm hiding. People people are always questioning me, oh, maybe this is a SIM account. No, this is not a SIM account. This is a live account. It's not a demo account. So if I can make $100 in less than an hour and 15 minutes, let's say in an hour, trading just one simple contract. Imagine when I'm trading 10 contracts or 20 contracts, what is the kind of money that one can make on a regular basis. Now, this brings me to another thing that I would like to share with everyone, and it is a logical way of looking at how can you make some an interesting amount of money if you were to trade properly. Now, first and foremost, trading is something that requires a lot of patience. Okay, there is no magic recipe here where you are going to learn how to trade and you are basically going to make money and become a millionaire overnight. It doesn't happen that way. So for those who believe that we are going to learn how to trade and we are going to make a lot of money and we are going to become millionaires in like a month or two, then the only thing I have to tell you is then I'm not the coach for you. I don't teach that way. And I always emphasize on the fact that this is not how it works. Now, just bear with me one moment. I want to share this table with you. So this is basically a table that I want to share with you. And this is the game plan that we have, okay? The game plan in the sense that when you come and you learn from us, these are the steps that you are going to follow. And I am going to share what this table is all about. Now, for those who are interested, please take a screenshot of this. And if you have any questions, you can always reach out to me. You can come and sit down with us in our office and see what we do. And we will be more than happy to share this information with you. Now, in just 2 minutes, I'm going to share what these numbers are on this table. First of all, when you open a live trading account in futures, the brokerage needs you to deposit $400 in your account. Okay, so initially when you are starting, you deposit $400 in your account. After that, the target that we have is on a daily basis, you have to make, or you're targeting only 10 ticks, or in terms of Forex, it's 10 pips. It's the equivalent of 10 pips. In Forex, you use pips. In futures, you use ticks. In stock trading, you use ticks as well. So you have to make 10 ticks only. And when you are starting, you trade micro contracts. This is what it is called. So what is a micro contract? Is actually a contract size which is 1/10 of a regular contract size. The value per tick of a regular contract, which is here, it's called a mini, is $12.50. And the tick value for a micro is only $1.25. Okay, so you are making 10 ticks of a micro contract. So you are making 10 times 125. You are only making $12.50. You take out $1 of commission and you are left with a net amount of $11.50. Now, for somebody who's trading here and they look at $11.50 and they are like, this is 1,200 shillings. What am I going to do with 1,200 shillings? But what I'm telling you is just bear with me. Be patient. Trading is a marathon, is not a sprint. So when you are making $11.50, there are 20 trading days per month. At the end of the month, you are just making $230. Now, $230 is twice the amount which is imposed by the government as far as your minimum salary is concerned. I believe in Kenya, the minimum wage is 14,900 shillings, which is about $150 per month. So you are making more than that. You're making $230. Now, initially you had deposited 400, you add the 230, and your account is supposed to be at 630 by the end of that 1 month. Now, we have a money management style. You cannot increase your position size till you have not made $500 in your account. Okay, so for every $500, you increase your position size by 1 micro contract. So here you are at 630. So you can't trade more than 1 micro contract. You can only trade 2 micro contracts if you have $1,000 and more in your account. So it will take you 3 months where you are trading 1 contract, 1 contract, 1 contract. You're accumulating all that money here month after month. And after 3 months, you are at $1,090. Okay. Now, if you're at $1,090 after 3 months, you can see that already most of the people who are coming and trading and they are thinking that they are going to become millionaires overnight, they are out, because it just takes you 3 months to only make $600. Okay, but here is the thing, there is a psychological aspect to it. You are trading, you are making small money, you are refining your trading skills, and you are basically learning how to manage your trades, how to do proper money management, how to do proper trade management, and how psychologically or mentally become stronger and get more and more familiar with the instrument that you are trading. Now, guess what happens? After 3 months, where you have 1,090 in your account, now you can trade 2 micro contracts, because 1,090 is 2 times at least 500, correct? Everybody follows me up until here? Okay.
Yeah.
Now, when you have 2 micro contracts, now your tick or your pip value is $2.50, and still your target is only 10 ticks per day. So now you're making $25 per day. You are paying your commission $2 and you're making $23 per day. And it amounts to about $460 per month. Now, as of the 3rd month, you have $1,500 in your account. And then you can see on the 5th month, you can trade 3 contracts. On the 6th month, you can trade 4 contracts. And then on the 7th month, you can trade with 6 micro contracts. Now, you can see that each tick value now has increased from $5 to $2.50 to $3.75 to $5 to finally $7.50. Now, $7.50, you are now making $144 per day after commission, and you're making around $2,900 at the end of the month. Now, this is some serious money that we are talking about in terms of what we make in Kenya. This is around, well, this is over 300,000 shillings per month. But here is the thing, it took you 7 months to get there, correct? Now, after 7 months, now you have $6,000 in your account. Now you remember initially you needed $500 to trade 1 micro contract. Now you need $5,000 to trade a full-size contract. Okay, this is our money management. Okay, so now what is happening is, as of month number 8, going all the way to month number 12, you can see it is highlighted in yellow here. So this is, you are trading a full-size contract, and in S&P 500, it is known as a mini contract. Okay, so now your tick value is $12.50. You're still making your 10 ticks, which is $125 minus commission, that comes to $120. And at the end of the month, you're making $2,400. Once again, you apply the same plan, the same principle of money management. For every increment of $5,000 in your account, you can add 1 contract in your trading position. So the first 2 months, which is month number 8 and month number 9, you are still trading with 1 full-size contract till you reach $10,000. When you are over $10,000, now you can trade with 2 full-size contracts. And now your tick value has gone from $12.50 to $25 per tick. You are still targeting your 10 ticks per day. And at the end of the month, you are making now you have $15,640 in your account. And You continue this process where for every 5,000 you increase one full contract size, and at the end of month number 12, you are trading with 4 full-size contracts. Your tick value is $50. You are making $480 per day for a total of $9,600 per month. And in your account, when you consider the fact that every time your account grew, you did not withdraw any money because you want to increase the size of your account, because you want to increase the amount of money that you can make, you are now holding over $32,000 in your account. Now, a lot of people come to me and they say, do you factor in the losses that you encounter in a day? Yes. Today, I took about 6 trades. I had 2 trades which were losses, but I still made $98. Now, if I'm looking at this, trading one full-size contract, and the reason I did this was, as I explained earlier, was to prove to you that you can trade with one contract and you can still make $100 a day. You are looking at over 200,000 shillings at the end of the month. Now, my question to everyone is the following. For those who are doing a 9-to-5 job in Kenya, which boss is going to increase your salary at the end of the year by 100%? Forget about that, by just 5%. I don't know of any. But when you are trading and you have the proper knowledge and you know what you are doing and you have been taught properly, then the sky is the limit. You can basically grow your salary or your income year after year after year. You are compounding it on actually a daily basis. And the numbers are there. Now, second thing, the target is only 10 ticks. We're not talking about, I'm not trying to put Forex traders down, by the way, but this is what the consensus was when I was trading Forex. I used to go into these forums and try and acquire knowledge and try and see what other traders were doing. And what I would hear is somebody was saying, oh, I made 200 pips today. Oh, I made 100 pips today. Oh, I made, I don't know how many pips today. We don't need to compete with anyone. You just need to make 10 ticks per day only. You feel 10 ticks is too much, make 5 ticks per day. Now, if you can't make 5 ticks per day, then trading is not for you. Okay, it's as simple as that. But for those who are involved in trading, how difficult is it for you to make 5 ticks per day? But you see, what is the biggest downfall for everyone is that people do not have the patience. They want to rush and they believe that they are going to make money overnight. Now, let me ask you another question. For those who have been to university, it took you 3 years, 4 years to acquire your degree. And then after that, what happens? You come into the job market, and are you guaranteed to find a job in your field with the salary that you are expecting to make? I don't think so. So what happens then? What do? You get any job that you can. And there are sadly so many graduates who are from university who have their bachelor's degree or master's degree who are not even working in the field they have so lovingly worked so hard for. What are these guys doing? They are doing jobs that they have to do because they just have to put their bread on the table. So what I am saying to those who are trading or who want to learn to trade, trading, consider it as a part-time job, as a hustle. Do your stuff that you are doing, save money, put it on the side. Basically, do not go with the idea that you want to quit your job and you just want to sip your pina colada in Malindi and you want to only trade 2 hours a day and make 1 million shillings per month. Don't think that way. Think of this as an investment where you are learning to do the right things at the right time with the right knowledge. And once you do that, if it takes you a year or two, so be it. But after that, you will have acquired an account size that is big enough for you to, even if you make 5 ticks, to live very, very comfortably and provide for your family and, make the most of it. These dreams will come, they will materialize, but they will take time. And you have to be patient with that. Okay? So this is basically, in essence, what we teach and, how we teach. For anyone that has any questions, of course, you have my information. You can contact me anytime. One more thing I would like everyone to know. Our policy is very simple. You are within your rights to ask questions and acquire information. Our role as mentors is to provide you with that information at no cost. And our role is to leave you with that information and then give you the opportunity for you to decide for yourselves whether we are the right people for you and whether you want to learn from us, basically. That's the most important thing. So we don't, how can I say, we don't pester you. We don't make phone calls to you and check with you whether, you want to take the course or no. You come here, we provide you with information, you go home, you brood on it, you digest it, and then after that, you decide whether you want to come or not. If you decide and you choose not to, it's absolutely fine, because that is your right, that's your prerogative. But acquiring the information, I would recommend, please come, talk to us, see what we do, and then make an educated decision about what you want to do and how you want to trade and how you want to learn how to trade. Okay? I will share one more thing with everyone. There are 2 types of people that come to, that can come to us. Let's say a person A comes to, or let me rephrase this. There are 2 types of, you can be one of the 2 groups. Let me put it this way. You can be part of group A or group B. What is the difference? Group A, you could be a person that, started demo trading, made some money, and you realized and you said, oh, you know what, this is so easy. I can open a live account, you crunch in some numbers and you say, oh, you know what, by the end of the year, I will have $200,000 in my account, for example. So you go, you open a live account. Now you are not interested in learning much about trading because you are infatuated with all this idea of making all this, humongous amount of money. And what you do, you start trading. Statistically, people within the first 6 months lose around $20,000 to $25,000 in trading. Okay, that is if they haven't learned anything. So what happens? You lose some money, you sell your car, you sell your guitar, you sell your watch, you sell your bike, whatever you have, you go and, take a loan, you borrow money from family, you put more money and you lose that. And then what happens? After 6 months, you give up on trading. Now, the whole idea is your frame of mind is very different. As soon as you lose money, you are not interested in learning how to trade properly anymore. The only interest you have is to recover the money that you have lost. So now you are in a revenge kind of mode. That's the way now you are thinking. So what happens then? You throw everything caution out the window. You are not cautious anymore, and you just want to recover your money. And that's how you are compounding your losses more and more. Now, that is one thing. On the other hand, group B, you have people who say, hey, you know what? Even if it takes me 2 years to learn, it's okay. That person is going to acquire the knowledge. That person is going to do demo trading for 2 years. That person is going to save money every month, $200, $300. They're going to put it aside. And after 2 years, guess what? They have the knowledge, they have the confidence, they have a system they can trade, and now they also have the money to trade with it. So they have all these things which are working in their favor. It took them 2 years. So what's the big deal? If after 2 years you can have money to trade with and have proper knowledge to trade with, then what's the harm? You get my point? So you decide which group you want to belong to. Do you want to be A, which is aggressive, being in a rush and losing money, or B, where you acquire the right knowledge, you have saved some money, and then when you start trading, it is going to make a difference in your life. So basically, this is what, in essence, I wanted to share with everybody. There is so much more to talk about. Once I get going, I can talk for hours, but I'm really forcing myself not to talk for too long, because I'm sure many of you have a lot of questions that you want to ask. So please ask away. I will answer as much as possible, please. Go ahead.
Thank you, Al-Nawaz, for that
You're most
presentation.
welcome.
At least you did show us a demonstration of trading the S&P 500 Index, which is also part of the reason as to why we were having this webinar, for people to know that they can trade stock indices using order flow. And I know it can be hard to digest order flow trading in 1 hour, as we all see. But the beauty about it, from what I am getting from you, Al-Nawaz, is that it can be a compounding machine for long-term investments. And so there's one question, actually two, coming from Damaris Njoki. And she was asking, and in line with your passion towards trading order flow, she was asking why futures trading, what attracted you to futures? I think you covered that with your journey in Forex, then you decided to go towards futures trading, but maybe you can also explain to her, because she also asked, what is there a guarantee that you can consistently earn the ticks each day? Are there days when you lose? Like today, you gave an example of 6 trades, you had 4 winning trades and 2 losing trades. So maybe you can briefly explain in regards to those 2 questions.
Sure, absolutely. This is a great question. One of the things you need to realize is that losing trades are part and parcel of trading. There is no day where you are going to have a 100% winning trades. It's not going to happen. The thing is, what we teach is that you are going to be able to make your 10 ticks per day. That is what we want to show you. That is what we want to teach you. Now, if you come and learn properly and understand what money management and trade management is all about, then on most days, you will end up with a positive day. Now, there are days where you will end up with a negative day, and that is part and parcel of trading. And you take it in strides, especially when you get to a level where I am, where you are risking more, you are getting more emotionally invested in your trade. And it's like, you have these butterflies. I still have that excitement even after trading for so long. It's part and parcel of basically trading. I don't think anyone can get rid of it 100%. Yes, you can have more control over it, but I'm the kind of guy who wears my emotions on my sleeve. So I have a tendency of talking to my computer, my screen. Sometimes I'm calling it names. And I have a friend, actually, I have this anecdote. He's in Toronto, and he trades stocks and I trade futures. And, every week we connect and, we exchange ideas and so on and so forth. And he has this favorite phrase. He goes to me, Al-Nawaz, when I have a losing trade, I'm just waiting to have that winning trade. And then when I recover my money, I'm asking my computer, who is your papa now? So basically that's how he's talking to his computer. He's the papa of the computer. So all I'm trying to say is that you're going to have losing days. Take it in stride, because it's a marathon. What you need to know is at the end of the week, at the end of the month, at the end of the quarter, and at the end of the year, you want to be positive. You want that you are winning more often than you are losing, And the most important thing is you are managing your losses. Because if you do not manage your losses and you lose your capital, there is nothing to trade with. So money management is of the essence. The most important thing is money management. So I can enter a trade right now. I can click, I can buy, I can sell. How am I managing that? How much am I willing to lose as of right now if I enter a trade is what is going to define my success or my failure at the end of the day. So take losses in stride, but learn how to manage your losses. And that is what we teach. We teach you a system. And in that system, we teach you money management and trade management as well.
All right, and just to add on to that, in terms of money management, I think as traders, we do know that capital preservation is our lifeblood. So
yes.
And, yeah, and maybe to touch on that, Al-Nawaz, you can explain why the focus is on pure price action. And we did see your chart of the depth of the market. And when someone learns that, you really do not necessarily have to go back to the charts from what I got. So maybe you can just explain more on that.
Yes. Now we have designed a system as to you see when you're reading the dome, it's not that you're focused 24 hours a day or for 2 hours you're just like focused on the dome. Initially, you can use charts as basically as a crutch. For some people, they are drawing what they call support and resistance or supply and demand zones. Some people have their own trading style, for example. So what you do with the dome is, depending on your trading style, you apply that when you are expecting, let's say you come to a support level and the market has come down and you are expecting to buy at that level because it's the support and the market is going to bounce. Now the dome is going to tell you whether the market is bouncing or not, whether buyers are coming in and pushing the market up or not. If the dome does not support that, then definitely what's going to happen? You are not going to enter a long position, at that price level. So it's the same thing with any kind of trading, not only futures. But sadly, in Forex, you don't have the dome. You don't have the order flow of the market. But another thing I might add is, if you learn the order flow of the currency futures, you can apply that to your spot Forex trading. And if you learn our system and you learn how to read the dome and you learn how to read the order flow or the tape of the market, then you can apply that knowledge within your own trading style in Forex. But the thing is, if you're going to come to us, we will teach you how to trade properly. And then you can take our system and apply it into basically Forex and make money instead of being a statistic of the 95% of people who lose money in Forex. With our system, we have a success rate of 74%. Okay, now this is 74%, which is much better than 5%.
We will give the contact details for Al-Nawaz on our YouTube channel as we do the editing for this webinar.
Okay.
And any contact information, access to the website, and how to get in touch. But I would like to go back to a question that was asked by Daniel Muihuri is asking, how long does it take on average for someone to learn and be consistent? And let me also add another question. When trading the S&P 500 Index, other than the technical analysis, what other factors should a trader consider? So, yeah.
Okay, great questions. First of all, when you come to us, the course takes 4 months. Okay, there is no shortcut. It's not a 1-month course. It's not something that I teach over the course of the weekend. It doesn't work that way. You have enough, we teach you under live market conditions. So we don't give you like, you know, books and ask you to draw lines and do things. And when indicators are matching and they are aligned, then you start doing this and doing that. It's not that way. It's under live market conditions that we teach you. So you see basically how trading works. So that is the first thing. The second aspect is that we meet once a week. You know, come to the office, we sit down with you. It's a one-on-one class that I'm handling. So you get my full attention. Maximum I've had is maybe 2 students at a time. More than that, I am not comfortable because I don't feel that, you know, I'm paying justice to the person who's there. So 2 people is the maximum that you will have. Right now, I have enough room. It's one-on-one that I'm, you know, conducting my classes. So that's the first thing. The second thing is it takes about 4 months to learn, and it takes about 2-3 more months to hone your skills. So give yourself about 6 months to 7 months to learn properly. And after that, and that is where I decide whether you're ready to trade live or not. If I see that you are not ready, and even if it takes you a year, you're not going to trade a live account. It's end of story. Because if you trade and you lose money, it's my reputation which is on the line. So there is no ifs and buts about it. You come, you learn, you be patient. And once I feel that you can comfortably, you know, make your 10 ticks per day, then I will give you the green light. But the thing is that the way we teach, most of our students within 6-7 months, they can start trading a live account.
All right.
So I hope I have answered that question. Is there any other aspect of this question that I have omitted?
I think that's they will be getting in touch with you in case they need any further questions on classes,
Sure.
the charges and the likes. But also you can also point us to order flow trading books. For instance, if someone is not able to attend the classes and they wanna like get started on order flow trading. And also in terms of diversification, can someone use order flow trading to trade other asset instruments? Or
Absolutely.
is it just futures trading? I know your preferences on futures, and scope markets, for instance, also has other asset classes. So can people use order flow trading after they have gone through the training to trade other asset classes? Yeah.
Absolutely. I am using order flow to trade. You know, in Canada, we used to have a savings account for retirement fund, and I have some money there, and I'm trading order flow to, you know, basically trade some stocks there. So order flow, you can apply it to anything. You can apply order flow to other aspects of trading if you want to. Of course, there will be an adaptation period because when you are trading stocks, the order flow is a little bit different than when you are trading futures. If you're trading oil futures, currency futures, and the S&P 500 or treasuries for that matter, the order flow is a little bit different because it depends on how liquid or illiquid that market is. So there is a period of adaptation, but once you have the knowledge, then you can see that, okay, S&P I was trading this way because it's a thicker market than oil, for example. So in oil, you know, it happens a little differently. But yes, absolutely, you can apply that theory or that knowledge to anything that basically you want to trade. And that has, first of all, 2 conditions is it is a regulated market. And second thing is that they do provide you with order flow. Then by all means, you can do that. Okay.
All right, good.
Somebody asked one question, why S&P 500? That ties in with the question that has been asked here. My belief is very simple. If you can trade one thing only, and you master that, trade that one thing, master it. And when your account size grows, then you can increase your position size. But now the advantage you have is basically you have an instrument that you understand the nature of that instrument. You understand how it's working on weekends or early in the week. You understand how it's reacting at the end of the month. You understand how it's reacting with certain types of news and so on and so forth. So now you understand the nature of what you are trading. If you trade that one instrument, and let's say with the example that I gave you, you started with one micro contract, which was at a tick value of $1.25. You got to a full contract where it is $12.50. Now, let me ask you this. Imagine you are trading 100 contracts. Now your tick value is $1,250, and you just make 4 ticks, for example. You've just made $5,000. Now, if $5,000 a day does not make you happy, I don't know what else will make you happy. There is a limit to greed. You also have to understand how much money is necessary in order for you to live comfortably and to provide for your family. Yes, the target, I know it's human nature, greed is there. But if you don't control that greed, you will never be successful in trading. Let me tell you from now. You have to be content with what you are making. But the most important thing is you have to do the right things. If you do the right things, money will come. It's not an issue. So don't go with the idea that you want to make money. Think you want to have proper knowledge, you want to apply it properly, and then the money will come. It's as simple as that.
Thank you so much, Nawaz, for that. We also would love to have you again in the future, and we encourage all our attendees to open live trading accounts with Scope Markets if they want to apply order flow trading. As Al-Nawaz has said, with order flow trading and demo practice accounts, you have to get the real feeling of the markets, basically. And if you wish to get this recording, I see a question coming in. It's usually posted on Silver's Trading Lounge on our YouTube channel. And if you wish to reach out to Al-Nawaz, we will link his website and contact information on that recording as well. So for any further questions, guys, you can get in touch with our guest. And Al-Nawaz, thank you so much for your time. We do appreciate it.
Thank you, Sylvia. I would like to take this opportunity, if you don't mind, just to give me 10 seconds, first of all, to thank you and Dennis for visiting me, and we had a beautiful conversation, and for having me on your Traders Lounge as well. And I would like to thank 2 other departments. One is the IT for, looking after the webinar and making sure that the recordings and everything is running smoothly. And I would also like to thank all the participants from wherever you are from for taking your time and, listening to what I have to say today. So all of you, thank you so much.
Yes, and with that, guys, we come to the end of the webinar, and it's been a pleasure. Thank you so much.
Thank you, Sylvia.
All right, bye.
Take care. Bye-bye.
Thanks, guys, for tuning in and sticking with us to the end. We hope you have learned something new. I would like to appreciate Scope Markets for sponsoring this webinar. Remember, you can open a live trading account with Scope Markets and apply the lessons shared by the guest in this webinar to your trading. Many thanks to our guests for speaking to us. We'll be open to have you in the future. Till next time, goodbye.